Have you?
Yeah.
Yeah.
Okay, well, we may as well get started, and hopefully by then, we can start to see people moving into the room. So, welcome back, everybody. I hope you had good networking over lunch, a good lunch. You've come back for a great session this afternoon, which is being kicked off by Marion King. Hello, Marion. How are you?
I'm good, Angela. How are you?
Yeah, lovely to see you.
You too.
So, Marion, I mean, you've been a senior woman in our industry for many years now. Just walk us through a little bit about your career.
Yeah, so I guess, is it interesting or is it difficult? I don't know. 4 decades in financial services, half of which have been in payments in the UK. So I'm now a portfolio director. I have 5 boards that I sit on. Prior to that, NatWest. Prior to that, MasterCard. Prior to that, Vocalink. And prior to that, I guess it was Bax, which is where I entered, which was the precursor of Vocalink. So, yeah, over 20 years in payments, seeing it from lots of different perspectives. And, of course, now we're at an incredibly interesting time. And I'm here really today to talk about open banking.
You are. You're the chair of the open banking,
Yeah,
aren't you? So
yeah.
what made you take that role on? Because I know it means a lot to you to see the system, banking open up to competition.
Absolutely. So open banking has been around really in reality since 2018. And it was formed by a piece of competition law called the CMA order, which instructed 9 banks, 6 in England, Wales, Scotland, and 3 that serviced Northern Ireland, to open up, provide API access to users' bank accounts with their permission, with their consent, to a standard, to a quality, to an accessibility, and to an ongoing performance. So the role of trustee is to oversee that. Now, that order was largely delivered when I joined open banking at the beginning of last year.
Yeah.
Largely delivered, still some more things to iron out, but pretty much there. So access between the banks and for third parties is there, but there's much more to be done.
So I think that we're ready to actually hear you talk about what's going on with open banking at the minute. And I've sort of had a bit of a sneak preview of what you're going to be talking about. So you're in for a treat, everybody.
Well, we hope so.
Yeah.
No pressure
Over to
there.
you.
And open banking is such a big subject. And I know all of you in the room will kind of know what it is, but bear with me, I'm just going to say a bit about it. But more importantly, what does it mean to the ePay Summit? What does it mean to e-commerce? Is this a reality? Is it something that sits over there? How can it benefit my business and what we're doing? And so I've spoken to Angela about the CMA order, largely delivered, and it's live and kicking. Open banking functions in the UK with quite significant growth. 11% of consumers currently use open banking, and about 17% of small businesses use open banking. In March, I don't have the April numbers yet, 1.5 billion API calls. That means a call for information of a consumer's or a customer's account information with their consent. 1.5 billion in a month. And about 60% of API calls have a payment attached to it. So it's a gateway to enabling a transaction or a payment. And there are 40% of cases that isn't connected to a payment. And Angela was asking me when we were up in the balcony, what sort of things would they be for, Marion? Well, things like digital identity uses open banking to utilize the KYC already done by banks to really project and accelerate the digital identity market, which has all sorts of potential benefits across a number of industries. It's things like decision-making, management information. You take effective management information with AI, and you get very strong and capable predictive tools. It's been used for benefits enablement, helping consumers identify if they are entitled to benefits and helping them claim those benefits. It's been used for credit decisioning, to make a fairer and clearer assessment of affordability and creditworthiness to ensure that those individuals that need access to funds can enable it. And many more areas. It's used in giving. It's a quick, easy way and cheaper way of giving funds for charitable work. So open banking, moving to open finance, moving to a data sharing economy is really a force for good, as well as fueling and enabling industry. Today, it's estimated that the open banking market is worth about 4 billion of growth to the UK and about 5,000 jobs, largely in the fintech market. So this isn't something that's experimental. This isn't something that's going to go away. This is happening in over 70 other jurisdictions around the globe, all doing it differently, all doing it at different paces, and ultimately, hey, we may get interoperability. But for now, we're focused on the UK. And yesterday, I was at a round table where the Economic Secretary of the Treasury was, and there was discussion about the 4 generations of payments. And I was thinking, I wonder what that means. What does the 4 generations of payments mean? And we're just starting the 4th generation. Well, the first generation was do it for me, and I'll explain what this means. The second, do it together. The 3rd generation, do it myself. And the 4th, it just happens. Some of you will remember the days where you needed to fill up your petrol tank at a petrol station in your car, and you drive your car in, someone would come out, they'd fill your car for you, you'd hand them cash, they'd go into the office or the shop, make the payment, and you drive off. That's do it for me. Do it all for me, please. The do it together is where you drive into the forecourt, someone comes out, and this still happens on the continent, doesn't happen anywhere here. They'll fill up your car with petrol or however much you want. You go in to the kiosk and you make the payment. That's doing it together. Doing it myself is where we are now. You drive in, you fill up, you go and pay, you drive out. The it just happens isn't here yet for fueling your car. And that will be where you drive into the forecourt, you fill up, and you drive away. Because your smartphone and your vehicle recognition will enable the payment, and it will just happen. A good example of 4th generation payment is Uber, as an example, where you book your car, you get your car, and the payments may be behind the scenes. You don't actually have to do the transaction. So those are the 4 generations of payments, which helps us realize kind of where we are in the evolution and how effective payments can make life easier as well as fuel the economy. And so what does open banking actually mean for this? How does it really work, and how is that going to enable that 4th generation? The biggest use case we have today, which is live and kicking, is tax returns. So a number of you here will have filled out your self-assessment. It will calculate how much tax you owe, and then it'll say, make the payment, and you can pay by card, or you can pay direct from your bank account. When you do that, you don't have to enter your bank information. When you do that, you're giving consent, and the payment will be made via the faster payments rails to HMRC. Bearing in mind, this was really only ready to go a year ago. This year, between January and the end of March, where most people pay what's due on their tax return, HMRC collected £1.5 billion in revenue. And that's how powerful it can be. It's real-time settlement for the government. They know that it's happened, and there are no card fees. There's not a card in sight. So for a service that's delivered in that way, it works incredibly effectively. That's quite a way, though, from e-payments and e-commerce. And at yesterday's roundtable, when we talked about the 4 generations, we were really there to discuss the national payments vision, led by Joe Garner, who's ex-Nationwide, and that came out with a series of recommendations of decluttering our landscape and really enabling the payments industry to take flight. 4 of the 10 recommendations utilize open banking, use that capability of data exchange to enable a much more effective transaction. And the vision that's articulated by the payments regulator is that open banking, together with real-time payments, could and should provide a viable alternative to cards. It will not replace cards. It's never intended to replace cards, but to offer choice, innovation, and a different way where appropriate. And that's the vision, but we're quite some way from delivering that vision. And why do we need it? Cards work very well. One of the key reasons is choice. The other key reason is that last year alone, over £5 billion was paid in card fees by UK industry and merchants. It's an expensive route to enable payment. And really, there are two, maybe arguably three key players in the cards market, which limits choice. And so this vision is to provide competition, provide innovation, provide a different way. Why is it in the UK we can't just do a quick P2P payment? I owe my friend, I want to send my sister a birthday present. Why can't I just do it utilizing real-time rails? You can in Sweden. You can in the rest of Scandinavia, you can in India, you can in Brazil. We haven't done it yet. We've had faster payments rails since 2008. I was leading Vocalink at the time when we delivered it. And since then, we haven't really progressed as well as other nations. And there are reasons for that. The gaps that we have in account-to-account payments to enable e-commerce and e-payments are insurmountable. They are insurmountable, and work is well underway. The first is obvious. It's the user experience. A clunky mechanism that takes a number of steps is way out of date before it's even been delivered. We're talking fourth generation. We're talking it just happens safely, securely, and with information available to the consumer so they're in control. The user experience is not there. It should be account on file like you have card on file. Hold that thought. Consumer protection isn't there. Chargebacks, dispute resolution, all of those protections that a consumer has when their payment goes wrong. Added to that, of course, faster payments has the blight of fraud and push payment scams. When Faster Payments was launched in 2008, it was never envisaged and it was never designed to be a point-of-sale payment mechanism. But the generations have evolved, and now we have an interbank payment mechanism that is fit for purpose, but it needs investment to get it to a point where we can utilize it for e-commerce account-to-account payments. It is surmountable. It's known what needs to be done. We just need to get on with it. As an industry. So fraud, consumer protection, user experience. And the last one, which is really fundamental, is the economic model, the pricing mechanism. How is this paid for? Who pays in that value chain? Because without an effective, fair exchange of value, the open banking market will not be able to afford consumer protection. That $5 billion of card fees goes to pay for those protection layers that enable the consumer to transact with confidence. And so that economic model, as I call it, it's more than just a pricing mechanism, is paramount in this, and it's tough. Because through the sort of evolution of banking in the UK, we do not have a fair exchange of value. Retail payments are free. Retail banking is free. And so cross-subsidization happens. You know, I spent 7 years in NatWest, and of course you have to cross-subsidize because payments aren't free. There's mechanisms and processes and controls that are needed to be funded, and not just funded, but maintained. And so these are the real gaps. So where are we now in bridging those gaps? How far have we got? Order was delivered a year ago. Last March, April time, JROC, the Joint Regulatory Oversight Committee, which is Treasury, and the three regulators, being the CMA, who own the order, Financial Conduct Authority and the PSR, designed what they call the JROC roadmap. 6 work streams all set out. We're a year on, so where are we? Those 4 work streams were as follows. What was called leveling up. 9 banks is good, but there are many more ASPSPs out there. There are many more PISPs. How do we get this leveled up across our economy? 2, MI. There's no point in only the sending bank or only the receiving bank knowing where the payment is in the flow. There are intermediaries in between, let alone the customer. So MI needs to flow through the whole end-to-end chain of the transaction. Fraud mitigation. There's more we can do, and we're doing it with risk indicators and other mechanisms using open banking to protect customers against fraud, to stop it before it's happened. The push payment scam problem is all focused on how do we recompense after the event. We need to stop it happening. The 4th one, that customer protection I spoke about, dispute resolution, what happens when things go wrong. 5, huge use cases, get it working real in the market, starting with variable recurring payments. The mechanism for variable recurring payments will enable an e-commerce transaction. And that needs to be piloted, tested, and be driven out. That piece is being led at the moment by the PSR, and we're working together with Pay.UK to bring that to reality. And there's some issues, and I'll come on to those. And the last one is called Standing Up the Future Entity. That's the replacement of open banking. That will be a central capability that will manage the scheme, the trust framework, the standards, basically the rules of the game, and will liaise and interoperate with other open data sectors. So it goes beyond just payments. To stand up a future entity, the regulators have to have powers. Those powers don't exist currently. Those come through in the DPDI bill, the Data Protection and Digital Information Bill, which is due for royal assent this summer, but I hear on the grapevine just now there's some potential delays. And of course, we're in an election year potentially as well. So again, some of these things are outside of our control in terms of how quickly we can move. Now, all of this needs to be funded. The CMA order was funded by 9 banks, and that was law. And I'm the trustee of that piece of law. And that work, as I say, is largely done, but it's ongoing in terms of maintenance monitoring to make sure it's working in the way that we want it to work. The rest of it, things outside of that order and beyond transition, so moving to this bigger new market, is not funded. The government will not fund. And therefore, what the regulators have done is they've gone to the market seeking voluntary funding, which has been achieved for the next 18 months. It's controlled, it's limited, but it will enable this work to continue, and that's key for me. Once you lose momentum in this type of work, it's very hard to recover from it. So we need to keep it going, we need to drive it forward. And so that voluntary funding clicks in next month, which enables the work to continue from open banking in partnership with many other organizations, including trade associations across the industry. That will include, that piece about variable recurring payments I spoke about, that will include how is this going to economically work? Who pays what? It is not fair and reasonable and cannot continue that 9 banks pay for this. Is it right that Apple get free access to APIs to provide statement information every time you make an Apple payment? No, it's not. That's not fair, it's not right, and it was never envisaged that that imbalance would happen. But it's happening because big tech is moving fast and taking advantage of the access to open data systems. And so I say it's happening, it's challenging, but we are making progress, and it will happen that account-to-account payments with the right protections, with the right framework, with the right pricing model, which ensures its viability, but also ensures its competitiveness. To be competitive, it needs to be cheaper. It needs to provide better value for the use cases that are going to use this. And this, in turn, helps fuel the fintech market and the financial market as a whole. And so what does the future hold? We move from open banking to open finance. And an organization called CFIT and many others are working on what does this mean. So things like pensions, home buying, insurance, borrowing, lending, all can have applications in the open banking arena. Why is it that when you get to my age and you're looking at all your pensions that you paid in over your career and you want the best advice, you have to hire a financial advisor? Because some of these things go back 20, 30 years and the laws and the rules are complex. Why isn't that information accessible to me on my pensions dashboard? Why is my healthcare spread around and every time I go and see someone I've got to repeat where I've got to in the process? So the Smart Data Council under the Department of Business and Trade is already working on use cases that go across industry. And we're starting with open banking because it's the most advanced. And in saying that, we are more advanced than probably any other country at the moment. We have more than twice the API calls than the rest of Europe put together currently. So we're doing well, but we need to keep that momentum going. So we move to open finance, and that future entity I spoke about that controls the central piece. It's a non-for-profit layer that just ensures the orderly functioning and safe functioning of the data exchange will develop to connect to those other areas. And the Smart Data Council, of which I'm a member, is now working with energy, looking at smart data information on energy, together with open banking to see how that can benefit SMEs. The next will be transport. There's discussions around healthcare, government information, and it just goes on. Retailing. That'll be an interesting one when we ask Amazon for their data. And these are the sorts of steps that it's going to move into in terms of data exchange. So to end, and Angela did say, take as long as you like, Marion. This is really exciting. This will revolutionize the way that data and payments work. It's not as a replacement for cards, it's as an alternative. It's building on the capabilities we already have and new technologies. And the innovation, the innovators are working out what can be done with it. I'm here, Angela, and you asked the question, because this is really important. It's a force for good. It has so many societal, economic, and consumer benefits, and it's the right thing to do. I reflect back on that it just happens. Sadly, it doesn't. Tough things take time, and it's a tough challenge as we work our way through. For me, though, the key is not to lose momentum. A year of election, potentially, a year of change. We keep momentum, and it requires every person and every organization across the industry to lean into this to ensure that those gaps are filled and we have those alternatives. Thanks very much.
Thank you so much, Marion. That was brilliant. Thank you.